Focus on Q4 earnings of Kalyani Steel. The company reported what was a mixed set of numbers. The revenue jumped 9% on a year-on-year basis, while the EBITDA margin contracted. To discuss the demand and pricing trends, we have with us R.K. Goyal, the MD of Kalyani Steels, now joining in. Mr. Goyal, thanks very much for taking the time out. Well, it's been a marginal growth of around 5% Q-on-Q in terms of revenue. Growth has grown it's grown 9% year-on-year as well. How much of it was price related this time?
Good morning. First of all, the growth is largely related to little bit increase in volume. However, definitely the margins are lower. As I mentioned in last interaction with you people, we were expecting a price increase. Till now, that is not settled, and hence definitely it has an impact on profitability.
All right. So you said that, the last time you were engaging for a price increase from OEMs, you were looking at roughly 3,000 rupees in terms of an addition or a revision. Just wanted to know, did that happen in the fourth quarter, the first quarter? What's the outlook? And are you satisfied with the kind of outcome of that negotiation?
We are definitely not satisfied. There was an increase of only 750 rupees from some and little higher from some others. But we were expecting, as you have rightly mentioned, around 3,000 rupees. Those discussions are still on, and let's hope for the best. Maybe we will get from 1st of April the next increase, and that will definitely improve our situation.
How much do you think that would be? Because what's the future course of action?
We have asked for 2,500 rupees. We are expecting that to be through.
Oh, okay. So you are expecting 2,000, you're asking for an additional price hike of 2,500 odd rupees. You're expecting that to probably go through. By when will you probably manage to implement that?
When you are in negotiation, that situation is dependent on two parties. So we like to have it today, but then it is not 100% in our control. Definitely, our customers are listening to us, and let's see how fast we can do it.
Okay. All right, fair enough. Well, your earlier price hike was 750 and you had anticipated 3,000 odd rupees. So it'll be interesting to see what you come up with this time. But nonetheless, your margins, you earlier stated your guidance was 18 to 22 odd %. You've done around 19% for the entire fiscal. Tell us, what is FY25 looking like?
Steel industry and particularly specialty steel industry is vulnerable to what is happening in China, how Chinese mills are behaving, which means the prices of all inputs, including coking coal, iron ore, ferroalloys, including nickel, moly, chrome, etc. So we are highly vulnerable to that, and to what extent we are able to pass on to large OEMs. That's another important factor. As far as our manufacturing part is concerned, as far as our yields are concerned, performance parameters in the plant are concerned, we are doing extremely well. And there is another thing which we would like to happen, that some sort of restriction on export of iron ore. Because within India, whatever we are getting, the quality and quantity both are going down. Quality is going down. At the same time, the availability is also going down. So we are taking up at the appropriate level and would like to see some more restrictions on export of basic minerals, which no country likes to do.
All right. What about, if, for instance, the price hikes don't come by at status quo, what end of the margins would you be? Would you be below 18%, or would you manage to hold on to this 18%, band that you've given between 18 to 22%?
I don't think we can run our industry thinking so negative.
Okay. But, I mean, the street has to price in something, but be that as it may, okay, I won't, push you for the margin outlook. The last time you joined us, you also said that you will give us, an outlook on the ramp up of the Kalyani Steel that you acquired in Jan 2024. Where has it reached? What's the kind of potential revenue here, and what are the synergies likely to be?
It is a part of larger plant, Kalyani Steel. It's a melt shop with a caster, and we are putting up a large integrated steel plant, and it will become part of that. So Kalyani Steel in isolation will not give any additional turnover, but it will become a part of our larger expansion plan, and then it is definitely reducing our project cost.
Okay. So you do have quite a lot of capex coming up. You do have a project in Odisha as well. I think it's around the 5,000 crore project. Can you give us details in terms of how exactly it's going to be funded? When does it come on stream? And cumulatively, what does your capacity go to and by when?
This project will produce around 0.7 million ton. The capacity will definitely go to that by that quantity, and it definitely will take time because we are in the process of environment clearance as well as forest clearance. All such issues are there, but it's a very unique project, and the majority of the products which will be produced, that will be first time in the country. So we expect things to be much better.
All right, you have the target of reaching to 1 million tons by 2028. I just wanted to know, the funding plans for all the projects that you have. This Odisha project, how much of it will come in from the promoters? How much of it will come in from debt? You said the last time that you will give us all these details. Also, while you're at it, projections for FY25 and 26 for the Kalyani Steel plant too.
As far as this project is concerned, we have not finally concluded how we will fund it, but we have more than adequate equity within Kalyani Steel, and balance can be debt or some other options. We will do it at an appropriate time. Right now, it is little early. Even bankers have advised us to wait for some time because EC itself will take a year's time.
Okay, what would be the upper limit of any kind of fundraising that you would consider?
I think we will take a year's time because we don't need today. Otherwise, we have to start withdrawing.
But what is that upper limit that you probably envisage, or, as a company that you would be comfortable with, say, even if it's a year down the line?
Yeah. So upper limit is in the sense once we get EC and FC, at that time we will do it.
Okay, and what about any projections on FY26 and 27 on, how the Kalyani Steel would aid your EBITDA? You said that it won't aid your revenues immediately, but because it's a part of a larger plan, I'm sure there would be some cost benefits coming in. What's the current, projected EBITDA for this plant over the next couple of years?
As I mentioned, this plant is part of our Odisha expansion plan. There, this melt shop will be part of that expansion plan, and it will save us in project cost as well as in time duration. It will not be operating in isolation. So it will operate along with the Odisha project.
All right, Mr. Goyal, then let's wrap this up with a long-term vision that you have. Say 2028, you do get to that 1 million ton capacity with all the things that you've been planning in Odisha and otherwise as well. What would then look like, when we look at your P&L? What would the revenue be? What would the idle margins be according to you?
It's very simple. We will have at least more than 20% EBITDA, definitely. Our manufacturing cost will be much lower. So it will be much more than 20%. And definitely, if you are producing 0.7 billion with the type of product mix, it will definitely increase the turnover by 7,000 crore once we achieve at least 95% capacity utilization.
All right, so we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Kalyani Steels. That stock is in focus, down around 1% odd. Just